Hi, Chad Tom with Credo Financial Advisors, and I have a question for you today when it comes to tax planning. Do you just do your taxes and plan once a year, or are you and your advisor sitting down and trying to strategize ways to reduce your taxable income in the future? If you're like me, tax season can be excruciatingly painful. I've had people tell me they would rather go get a root canal from the dentist as to do taxes. It's just something they hate doing. But if we properly plan today, we can hopefully reduce your tax burden well into the future. Many people for years have been told to put money into their retirement accounts and put it in before tax because it reduces your current income and you pay less tax today. I get it, I get it. The question though is, what are tax rates going to be in the future? When you go to draw off of these accounts, are you going to be a beneficiary of your parents' IRA where you will have more income to take? Also, do you know how much you're going to need today to live in retirement? We don't know what inflation is going to be. If we only knew what tax brackets would look like in the future, we could definitely plan accordingly, but we don't. Can you imagine retiring at 63? Say you inherit $1 million from your parents' IRA account. You have now under the Secure Act to take distributions each year and have that IRA diminished within 10 years. So not only have you hopefully retired, but you have 10 years of taking distributions on that IRA, and guess what? Age 73, you have to start taking distributions on your own IRA. So there's no time really to reduce taxes as it's too late. Add in the IRMA provisions with inside of Social Security, and the more income you have in retirement, the not only higher amount of tax you're going to pay on Social Security, but also on your Medicare premiums. You need to make sure that you're having a discussion and planning for the future by asking your employer if they have a Roth 401k option. Talk to your advisors about adding money to Roth IRAs, or if your income is too high, getting into a backdoor Roth IRA. I know the IRS hates that term, but it's a way to make contributions and pay the tax this year on virtually a conversion. I'm not saying one way is better over the other, but you need to make sure that you're properly planning for what tax rates could do in the future. We are at some of our lowest tax rates that we've had in our lifetimes. And to look at the debt that the country has, they're going to have to find a way to have tax revenue. Best way to possibly do that could be on IRA distributions. So it's imperative that you're talking to your advisor about what the future could possibly be for you, your distributions, and how that affects your income and what tax bracket you may be in. Have a great day.